Good morning, folks, and welcome back to Almus Market Mornings. In the absence of official US data, Fed's Beige Book survey comes at a significant time. The markets have largely made a U-turn on their rate cut bets since last week, and now they are currently pricing 25 basis point cut in December with 80% probability. The Beige Book survey showed that the economic activity is holding up despite the challenges. We have also seen a significant recovery in asset prices since last week. Risk assets have made a strong comeback, dollar trades weaker, and gold is also holding on to its gains. Interestingly, the British pound had a fine day as well as the budget was announced. Markets seem to approve of it with the 10-year gilt lower by 10 basis points and the pound having a good show. Good morning, JK. Your quick take on the UK budget and the Beige Book survey.
Good morning, Swaraj. Yeah, I think as we enter the fourth day of the week and also Thanksgiving Day, of course, in US, so US markets will be closed, but there seems to be a fresh wave of risk-on sentiment in the market. Various things also pointing to it. First up, it's the UK budget, and market seems to have given a vote of confidence to the budget. And according to the forecasts that the government has presented, the current budget deficit, which is the major concern for the markets, is expected to shrink steadily from 52.4 billion to about a surplus of 21.7 billion by 2029-30. And the way that they are trying to achieving is to freeze the current tax slabs, the limits up to the year 2030. This means that there will be no change in tax slabs. Normally the tax slabs are raised to enable people to have more money with them, but if this is not done, and as the incomes increase, government collects more taxes, so it's not hurting anybody immediately, but in the future people are expected to participate in the government spending, or to give more revenue to the government. And market seems to be believing that this can be credible, it can be achieved. Apart from that, they also imposed higher taxes on property, dividend incomes and savings, and mansion tax on properties worth over 2 million pounds. So there they have not touched the sensitive areas, but they have definitely laid out a plan which the market seems to believe that can be done, at least for now. Yes, of course, it's a long period, and there can be some different incoming government, whether they will change that. But for now, markets are happy. So it's considered to be a stealth tax, and not really hurting immediately. So I think markets have taken it very positively. UK bonds have rallied. And they have also, the pound is also rallied. Uh, you know, Analysts and investors interpret it as a move to restore fiscal discipline after years of volatility. And we have always seen, some tensions around UK budget, and particularly 3 years back when the pound fell to almost near parity to the dollar, when the budget indicated no way to rein in the big deficit. So that's a good news to start with, of course. And of course, we did have some data from US yesterday on durable goods orders, which was slightly better. Claims data, jobless claims data, was also 6,000 lower compared to last month. Of course, the durable goods orders should be taken with a pinch of salt, because it is only for September. Again, we are already nearing December. Claims data is updated, so that's not a stale. So we are seeing the number steadily reducing. However, the continued claims are on a rise, and it is almost near a 5-year peak. Even the 4-week average number is higher at 227,000. Beach book, as you said, showed mixed indications. Employment is seen declining. Consumer spending was also declining. A K-shaped economic recovery is seen. Some negative impact from the government shutdown, as well as the tariffs, is still influencing the growth. But however, there are no major concerns as far as the regional growth is concerned. As I said, there is a whiff of fresh risk on sentiment in the market. I mean, even some of the smaller economies are exuding it. Like New Zealand's business confidence rose 67.1%, and the New Zealand dollar is rising after the another rate cut by the central bank, and indicated that that probably it and no more rate cut. Australia's also new capital expenditure rose massively, 6.4% quarter on quarter, versus a poll that indicated 0.5% increase. One more. This one, few more things which I have seen. The Bitcoin, which is also a lead indicator of risk sentiment, has come above 91,000, and not long ago it was at 85,000, and having fallen about more than 30% from its peak also. There are some now forecasts started to come for 2026. One major investment banker is projecting S&P at 8,000 next year. Currently, it is at 6,800. That will be a stunning series of performance by the markets if it does happen. Now, that all this sentiment with Fed's rate cut expectations not coming off. It's now at 85%. And there is also indication that Mr. Hassett, the current economic advisor, will be the probably the Fed chief to be appointed by Trump. And he's known to be dove, and possibly market expect that he will bring down the rates below 3%, which is currently at 3.75%. So another boost to the sentiment, and the dollar is also reacting lower. My euro has moved up above 1.16 mark. Of course, 1.1650. Staying above 1.1650 will be a key for the gains. And what was seen recently is that even small dips have been bought. Sterling pound, of course, looks poised for good gains towards 1.33 or even 1.35 is possible. The yen also has been stronger now with the lower US yields, and some talk about a hike in December by the BOJ, again gaining ground. And now market feels that a rate hike of 0.25% by Bank of Japan may not be so devastating for the investors, and it may, unless they sound very hawkish and indicate more rate hikes to come. So 0.25 might be taken in this trade, and that's what exactly Japanese authorities want. They want to hike the rate based on inflation, but at the same time they don't want to have any disorderly movements in the market. So that if they perceive that to be possible, I think a rate hike by the BOJ is very much on the cards. Now, even the risk sentiment is also improved in the Indian market. Yesterday, both Nifty and BSE Sensex rose more than 1%. This is the largest rise we have seen in a single day since June, and that augurs very well for the domestic market. FIs were seen after a day of outflow. FIs were once again seen as buyers yesterday. A good amount was seen, and the dollar rupee, of course, is not coming off. Importer demand, month-end demand, and also the sentiment is set to improve after the big drop in the INR that we saw last week. Yes, I think that we continue to watch out for inflows, a trade deal. Maybe a break into new highs in the stock market possibly also can be a big boost. But everything boils down to the supply of dollars in the market, which currently mainly done by the central bank. And once that changes, I think that is when we can expect a shift in the USD INR trend. Meanwhile, I have just failed to mention what's happening in the yuan. The Chinese central bank has fixed it at the lowest level in the last 13 months. And dollar yuan, or the dollar offshore yuan, is now trading below the official fix, which means the market is now selling more, buying more of yuan against the dollar. So yuan is also seen strengthening. Overall atmosphere is a weaker dollar, and big risk on that is once again seem to be developing as we move into the year end. Thank you.
Thank you, JK. And Of course, very strange. We are seeing yuan sort of remaining strong and also the yuan fix, and at the same time, rupee, on the other hand, has been quite weak. The sentiment on that front sort of not improving, but there are some things slowly and steadily it's improving. There is sentiment in Indian equities is improving. It rose more than 1%. There is a benchmark indices, so that potentially, if that sort of trend continues, that sentiment on the rupee front might also see some sort of gains. Otherwise, broadly, dollar trades lower, pound looks for gains, euro trades around 1.16. Fed expectations remain strong for December rate cut. There is a market expectation for a Fed rate cut remain strong at 85%. Chatter about the current economic advisor, Mr. Hassett, being the next Fed chief, being appointed by Trump when Chair Powell's term expires. That's also something that markets are looking forward to. That's it from us today. Thank you for listening. We'll catch up tomorrow with a fresh round of updates.